G'day everyone and welcome back to another Aussie Investing Machine live stream. Thank you so much for joining me in another episode. Really appreciate all your support. Wondering if you saw me in ASX Investors live stream on the weekend, his massive 10-hour live stream. It was a lot of fun. If you haven't seen it already, go and check it out. Some really interesting topics discussed, some really interesting people on the live stream. Yeah, I thought it was a really great initiative by him. So had a lot of fun there. Hope you've all had a good week so far. It's Wednesday already. Thanks for joining me again at the typical time of 8 o'clock. Every Wednesday we do a live stream, so make sure to subscribe to the channel and give the video a like if you haven't already to not miss out on live streams coming up in the future. In today's episode, a couple of companies I put on the thumbnail included Afterpay and Adbri. Couple of updates for those companies, and then also some updates on the greater economy as well. We'll probably kick off with that. There's an article which we'll go through and maybe have some discussion around exactly what is happening in the global economy and how it might affect stocks in general. So stay tuned for that. We'll get to that in just a moment. If you haven't already been on one of these live streams, know that you can drop a comment at any time in the live chat and I'll do my best to get to your question. I will get to every question throughout the live stream. If you've got a question on investing in general, on any stocks, please feel free to pop a question down below and I'll get to all of them. So let's kick things off. I wanted to first talk about the greater economy as a whole. So let's jump over to that article straight away. It's an article I saw on Routers, however you want to pronounce it, and it's talking about US bond yields, which have seen a steady rise. And bond yields are government bonds which you can purchase and you get a guaranteed return. It's essentially a safe investment because it's the government that pays the return on the yield on the bond. And it's if bond prices are high, it gives you a risk-free investment avenue. So the higher the bond price is, the less likely people are to take risks in investing in things like stocks, which are seen to be far riskier than bonds. So as the bond yield goes up, stock prices are meant to fall. Let's have a look at what's been happening in the US and especially on the US bond yield market. So we can see here the US stock market has so far digested a surge in treasury yields, but some investors are worried that a continued ascent could prove more problematic. The yield on the 10-year treasury note climbed to a one-year high of 1.36%. So it doesn't seem that high, but it goes on in this article, which we'll get to in a moment, to talk about how low it was earlier in 2020. It was at about 0.5%, which is pretty much a yield where it's not worth putting your money in. And all of the government stimulus is trying to boost the economy. And as the economy gets stronger and stronger, bond yields are meant to go up. So let's have a look here. The rise in yields comes as the S&P 500. S&P 500 hovers near all-time highs at the end of a fourth quarter earnings season. And that makes sense. Bond yields are low. People are looking for better returns on their money, so they gravitate towards stocks. We're also seeing a lot of government stimulus, and this additional cash coupled with a low bond yield means people are throwing their money into equities or stocks, which in turn drives up the value. And we're seeing a lot of especially growth stocks and speculative, investments like Bitcoin, although that's becoming a bit more stable. We're seeing those things increase in value tenfold, and that's concerning a little bit because the growth is a little bit unnatural. It's not sustainable. When we look at the past 100 years of investing, that's typically not the way things go. So we've seen companies overall report earnings 17% above expectations. So the companies are performing, it seems, and that's according to Reinventive data. Earnings will continue to be in focus this week, along with data tracking the economic recovery and developments with President Joe Biden's 1.9 trillion coronavirus relief package. So this is that cash we were talking about that's stimulating the economy. putting money in people's pockets, which they're choosing to invest a lot of the time in equities. So despite solid corporate results, which we mentioned, worried investors can point to any number of signs, including blistering rallies in Bitcoin and Tesla shares, and the proliferation of SPACs, which are special purpose acquisition companies. Considering making a video on those in the near future. Let me know if you'd like to see that. Ultra easy monetary policy and fiscal stimulus, so easy to borrow, has fueled an excessive appetite for risk that could be curbed if yields start to rise. So this is setting the scene for what's to come in 2021 and going into 2022. Citi, which is a major bank and broker, or not broker, I should say, what do they call them? People who Citi are people who recommend whether stocks will go up or down. I think they can be called a broker consensus, for example, a lot of the time is put forward by Citi. If someone like Citi upgrades a stock's buy price usually goes up. They've got a lot of power in what they say, and they're usually on the money with their recommendations. So Citi is reporting this week that a 10% pullback in, this is equity prices, seems very plausible, noting that if rising bond yields drag down some mega cap IT growth names, hint hint Afterpay, we'll get to that later, that will impact the broad index as a result of the overrepresentation of a few stocks. So we know Afterpay has a massive market cap, but in the US, the equivalent is something like Google or Apple or Tesla. So that's a little bit about the general economy. Again, this article is great. If you want to check this out, I'll leave a link in a comment below once this live stream gets uploaded. But yeah, low yields and interest rates support equities in several ways, such as reducing debt and borrowing costs, making stocks look relatively attractive to bonds and helping increase the value of companies' future cash flows. Now we'll get to that when we discuss Afterpay. So I might leave that there, probably just on this last one. At 22 times its forward PE, the S&P 500's valuation is well above its long-term average of 15.3. So it sort of is indicating that's one way to look at how the market's currently valued. There's the Schiller PE ratio as well. You can look that up if you want to get a bit more of an understanding about that. But in general, the market's quite heavy, and it has been that way for some time now. There's been nothing to bring it down because we've seen bond yields and interest rates falling, but now we're starting to see the tides turn a little bit. So this is when things get quite interesting, and it can be important to structure your portfolio so that you don't get caught out. I'll just come back, see if we've got any comments. Pat, how you going, Pat? Nice to see you on Saturday. When's your 10-hour stream happening? Gee, I don't know if I've got 10 hours in me. I might do 10 hours for my 10,000 subs. How about that? Is that a fair deal? Don't hold me to it, but at least maybe a couple of hours I reckon would be good. But yeah, still got a little way to go. Don't have that amazing growth just yet that the ASX investors got, but he's doing an incredible job. Thoughts on Apple's drop in Northern Star? Tristan, I'll get to that in a moment, or maybe we'll look at that now. Actually, it's a good one to look at. And Pat, it'd be interesting to see what sort of inflation we start to see as a result of the Reserve Bank's printing so much money. 100% agree. It's likely to be quite a lot. The intention of printing all this money is to increase interest rates. The end goal is to get an interest rate that is around 2 to 3%. We've seen the Federal Reserve has explicitly stated that, that's their long-term goal. And the way to get rates to that point is to print money, to give people more money. More money to spend means people are willing to pay more for products, and therefore the average price of products rises, which gives you inflation. So that's what governments around the world are trying to achieve. The other side issue with that is that loan rates go up as well, which can really make waves in the property space. If the rate of your loan goes up, the interest rate on your loan, repayments increase, and if you're already stretched on your repayments, essentially we've bought if you bought property recently, you've bought at the very lowest rates we've seen in years and years, in 50 years. So there's only one way it can go from here if interest rates start to increase. So we keep hearing it won't be an issue, but it's got hurt at some point. Completely agree. We might jump on Tristan's comments here. Let's have a look at Appen, see what's been happening. Appen was sort of, save that article for later. Appen, I was definitely looking at Appen for a while, and the company looked good. Appen provides, I guess, artificial intelligence training data and material to companies like Google, for example. Really seemed like a strong company, but we saw at around this point in August 2020, we heard some reports of, I guess, companies putting less orders through Appen and really sort of not using their product as much, and we can see that being on a slide. I sort of looked at them here and considered, investing around this point because I thought we're at good value. We saw a bit of a turn in the price, and it has just cascaded down from there. So the PE ratio 48 still very high. It is a technology company, I guess, but they've sort of been caught in the headlights a little bit. It'd be interesting to see what the latest news is because I've just been seeing them slide, but I haven't really watched. So it looks like it's results based. This came out on the 24th of Feb. So share price is down 6% on the day. So what happened? Revenue went up 12%, which is respectable, especially for such a well-renowned and big company. A good growth stock, in my opinion. We're looking for sales increase or revenue increase of well over 15%. Sorry. Most of the earnings came from its relevance segment. I'm not sure what that means. Speech and image followed with 61.2. So this is all about that AI data they're producing. So some segments down. Cyclical timings they're blaming, and obviously conditions throughout 2020. So customer base expanded, so new clients, which is good. Top 5 customers increased their number of projects by 34%, so that's positive. That's contrary to what I was saying before. Underlying EBITDA lifted, which is good. It's other results impacting the share price. So the underlying EBITDA, which is sort of margin before factoring in tax and depreciation, earnings before interest, depreciation, and amortization, stood at 18.1% compared to 18.8%. So their margin is slightly reduced, not dramatic. And they said that was a result of investing in sales and marketing. So not a loss of revenue, which is good, but obviously analysts like Citi, we talked about before, were expecting an increase in EBITDA, and that might have been a reason. The soft result might have been a reason for the share price slipping. Underlying net profit, so after we take into account interest, tax, depreciation, slid 1%. So more than the EBITDA. And this was growth investment again. So it's not as if the company wasn't selling as much or making as much money. They're saying that it was because of investing activities. So they had a strong balance sheet, 78 million in cash and no debt. So very strong current ratio, very strong debt to equity. On paper, looks good, and a 50% franked dividend. Seems okay. I don't know. That's not a shocker report. So potentially Appen could be becoming better and better valued. What do you think, Tristan? Are you invested in Appen? Are you thinking about making a move soon? It might be worth even pulling up something like Yahoo Finance and seeing what the technicals are saying. We can do that. Let me come over, have a look at Appen. So I'm just doing a 1 week interval. Yeah, so we can see this on the moving average. See if I can make this full screen. Maybe it is. On the moving average, we're way below. So we'd be waiting for a bit of a turn in that. If we look at the MACD, which tells us the buying and selling patterns, there's been a strong period of selling. It's starting to ease, but we've seen a recent spike down again. So looking at this at the moment, I'm still, if I'm interested in Appen, I'm still waiting. I'm waiting to see the selling to stop and hopefully get a buying pattern like this. That's what I'm hoping for. Stochastics has hit rock bottom, continues to drop, doesn't seem to be going anywhere. So long way below the moving average. You could take a risk and try and get in now, but it looks like there may be more selling on the way. Some of those results were only recent, down 12% today, so still losing a massive amount. Be very painful if you got in when I was looking at investing up at $30. It might be some time before they recover to that price. But from what I'm reading in this Motley Fool article, no debt, plenty of cash on hand, small dip in profits, but an overall increase in revenue. And yeah, that sounds pretty good. You know, if you took that out of context, that's a pretty good result. The only black mark there is the drop in profit, and they're saying that's because of investing activities. So that's not a massive negative. In my opinion, it would be interesting to see what sort of insider selling's going on. So maybe we could take a quick look at that, and then I might move on. What are we looking at? Dividend's been nice and increasing. So we've got Vanessa, Carl, Mark, Dina, and Stephen. Vanessa bought 25 grand at $25. William is not a director. He's sold heaps. 16 mil at 30. Good time to get out. It's interesting. Mark is a director. He sold at 30, 2 mil. Christopher, not a director, might have been exiting his position at 29, sold 58 mil. Incredible. But we're not seeing a lot of buying, that's for sure. Not since 2019. So not a lot of activity. At least we're not seeing any big sells from directors and management. So I guess considering that, they're in it for the long run. So yeah, overall, not seeing incredibly bad signs, but I think as an investor and probably as institutions as well, before buying more, we'd want to see a full recovery in their next lot of reports. So let's come back. BC, good evening. How are you? Plans are, if any, to combat inflation. Yeah. Very good point. Keen to hear how you go about allocating your salary in investments. Yep, I might get to that in a sec. I've just got to finish off on Tristan's comments. So his other stock he talked about was Northern Star, and this brings a little tear to my eye. Northern Star, I think I invested in at $13. Thought it had some upside. If I pull up the chart, I'll show you exactly where I bought in. I probably bought a tiny bit early, and I've paid dearly for it. I bought Northern Star at this point here at $13.40 because I thought it was going to cross the moving average and continue on a run up. I was impatient and I bought before it crossed the moving average, and I paid dearly. It's the worst performing stock in my portfolio. I still like the company. I believe they've got good fundamentals, but we've seen a massive selling spree. I presume it's because of poor financial results. I haven't been following it. I've just been upset about it. Board update. No, I might have to look for an article. Let's see what we've got. Northern Star. Whoops, it's not what we want. Here's why Northern Star is climbing. Oh, it's not the case. Yeah, not seeing a lot of news. 2 weeks ago, record profits. I mean, I like the company because of their strong financials. They completed their merger with Saracen Minerals successfully, which was a huge part of Northern Star, expanding their gold assets, and their mine has like doubled in size now. I'm not sure. Maybe it's being shorted. That's a potential, so we can check that if we look at Northern Star on Market Index. We can have a look at that and see what the short sale percentage is. So look, looking for short sale percentage. Can't see it. Maybe I've missed it. I won't dwell on this too long, but yeah, interesting. Perhaps it is short sale. Short position for Northern Star. Oh, so it was pretty highly shorted back on the 4th of Feb. We can see that 11% of total float shares were shorted, but we've since seen that absolutely tank back down to 2%, which is sort of normal levels. So it looks like there may have been a bit of a GameStop scenario going on with Northern Star, commencing, sort of when I bought, should have been watching this. Huge amount of short sellers, which is just sort of finished only a week ago. So good results from the company. Looks like it's been subject to short selling, which is a bit upsetting. I don't know why exactly. If anyone does, let me know. Yeah, but you'd think if this is the price movement for Northern Star has been influenced by short sellers, and we know they have strong fundamentals, and the news has been positive in the past few weeks, we should see a quick rebound. Well, I hope so. I hope I'm not just telling myself that. But yeah, keen to get your thoughts on that. That's a worrying spike for sure. But yeah, great comment, Tristan. Thanks for that. BC, back to your comment. Any ideas to combat inflation? Yes. Talked about in the last live stream, I think I did a little bit about rebalancing the portfolio, and I'm getting there. Just need to sit down for a day and complete that list of stocks. But one way I'll do that is by investing in dividend stocks. That's one way. I think the hardest hit companies, if we go back to that Reuters article that we looked at earlier, we can jump back to that actually. It talks about, I think they've got it highlighted. It talks about mega cap growth IT names are the ones that get hit the hardest when we have rising inflation conditions. So dividend stocks and dividend aristocrats, for that matter, which are companies which are paid a consistently increasing dividend over a long period of time, are not necessarily subject to a lot of volatility. And another way you can look for stocks which have low volatility is by adjusting to a metric called the beta. I don't know the technicals of how the beta works, but it's a feature on stock scans when you look at them. And if you narrow the beta range, it only looks for stocks that have kept within a certain price movement. So beta stock meaning, I'll just pull it up. So beta is a concept that measures the expected move in a stock relative to movements in the overall market. A beta greater than 1 suggests the stock is more volatile than the broader market, and a beta less than 1 indicates a stock with lower volatility. So if we go to Asx Stock Scanner, and I think I was using investing.com, and if you have a look, oh no, sorry, got my ad blocker on. There we go. Okay. So if we have a look, we can do they've got a top screens section here. I'll just make this a little bit bigger so you can see it. So under their top screens, they've got, where are we? I might have gone past it, sorry. I think it's called the Rock Solid Rock solid balance sheet? No. Dividend payers who are cheap? Which one was it? Maybe it's the dividend players. No. Sorry, bear with me here. Assured yield play. Sorry, this is the one. My mistake. I was looking for the word dividend. So assured yield play, what that essentially means is a company that will pay its yield, which is a good dividend payer or a dividend aristocrat. And you can see in this preset, which you can get under the top screens, one of the criteria here is the beta, which we just talked about. So if we go back to that definition, a beta of less than 1 indicates a stock has lower volatility than the general market. So this screener is automatically setting the beta between 0.1 and 1. So anything under 1 is less volatile than the market. So if you add the beta metric to your stock scan, you'll find stocks that are less volatile than the market. And in general, stocks that are less volatile will be less impacted overall by rising interest rates. So that's one thing I'm doing. Sorry, that was a bit of a stuff around, but yeah, what have we got? So also keen to hear how you go about allocating your salary. So I try and put about $1,500 a month, get paid monthly. So about, $1,500 a month into investing. That's the way I go about it. It's hit and miss. Usually I can put that away unless something comes up like body corporate payments or another bill that's quite substantial, or a holiday or whatever it might be. It's a target, and if you extrapolate $1,500 a month going on forever, you end up with a pretty good investment, even if you're just putting it into ETFs. So as much as possible, any bonuses or whatever, same sort of deal. That's the go for me. Interested to know what you do as well. So let me know. So traditional ways of hedging against inflation in the past have been gold. We've seen crypto as an alternative, and ETFs like BBUS. I'm not familiar with BBUS. The US government also has a history of manipulating the gold price. Okay, I don't have a lot of information or knowledge about any manipulation, but you're right, gold has been consistently a hedge against inflation. Silver as well. Bitcoin is now becoming sort of a third asset that promises that sort of stability. Any clue on how to pay tax on Northern Star as it converted from SAR, which is Saracen, and says purchasing price is 0 on my broker? How to pay tax. So I think I know what you mean, Max. I had PushPay in my portfolio, and a similar thing happened. PushPay had a 4-to-1 stock split, so a $10 stock at a 4-to-1 split becomes worth $2.50. So all of a sudden it looked like I had a massive loss on PushPay. I'll just see, just bear with me for a moment. I'll see if I can pull this up. I'll show you what I did in my broker. I hope that will be of some assistance. I'll just get this window up. Sorry, a bit of stuffing around, but it will be worth it. So can we see that? Yeah, so here's my self-wealth, and if I go to my portfolio, here's Northern Star. Shocking loss at the moment, 18% down. How sad's that? Cochlear's done well, by the way. So PushPay, here we go. So average price is what I paid for it. Let's see if I can zoom in a bit. So average price is what I paid. It's $1.83. I didn't actually pay that. I paid, I don't know, like $6 or $7. So I actually manually adjusted it because, like you're saying, it showed a massive loss. It didn't say zero. So I think I hit edit here, and that allowed me to edit the average price. But if you go to your orders or equivalent, you can print out reports. Maybe it's under trading account, but you can filter and print out reports, and it will show you exactly what you paid. It's not lost in time. Yeah, I'm interested. I'm not sure. The ATO certainly won't know that you've paid zero on it. They'll have the receipt, the official receipt of what you actually paid from that broker transaction. So maybe check that. Yeah. Not sure what you mean by that though. It's now zero. Did you have Northern Star and it converted to SAR, or did SAR convert to Northern Star because they merged? I think that's what you mean. Let me know. But yeah. So Max fell off nothing, just like Kogan and Appen. Yeah. Yeah, but Kogan fell for me as well, but it's strong. I think it's a strong business. Maybe we both got in when it was overvalued. I know I bought when the CEO was selling big, and that might have been a sign, but I think if we've got a long-term outlook, then you should take a positive attitude into it. If you've done the research, you like the fundamentals, and you believe in what the company is doing, I certainly do for Kogan, then yeah, have faith in yourself and just wait it out. It's not investing advice. Please consult a licensed financial advisor before making any investment decisions, as always. But yeah, Appen, I probably didn't understand well enough. That's why I didn't pull the trigger back when it was $30, and now I'm glad I didn't. Yeah, it's a tricky market at the moment. Yeah, that's right. I mentioned that a bit earlier, Max. I'm not sure if you're around, but yeah, I just went through Appen in a bit of detail, and their report looked good. The only thing that was down was a little bit of a drop in profit by like 1%. Everything else was good, and the only reason the profit went down is because they were investing in research and development. Debt's zero, cash is good. Don't know. But then we looked at Northern Star. As I said, yeah, it's been subject of looks like a shorting attack. It's been short sold. So Pat, my guess for Northern Star dropping has something to do with the economy recovering and COVID easing. People think the price of gold will drop. Yeah, I mean, the price of gold is definitely going to impact them. Yeah, that's probably a very good assessment, something that I've sort of looked over. How is the price of gold going? It's probably something we should have a look at. Price of gold. Maybe it's better to go to market index. It's hard to find a good gold chart, but I think market index has one. Yeah, okay. So where were we peaking? At the peak of the chaos, or just after the peak in August, people were still concerned, up at 2,000. Is this an ounce? I think so. And then it's just tracked down. So it's not dropping like a rocket, but I'm not sure the economic relationship between gold and interest rates and whether or not one goes up. Is there a correlation? If you know that, let me know. I don't have the knowledge on that. Be interested to hear what you think, but it probably just got boosted a little bit too hard here, and now it's sort of settling. But it's lost its trajectory that it's been on since sort of May. Sort of come down. Yeah, that probably is affecting Northern Star quite a bit. So that's one factor. I mean, is that a 10% loss? Yeah, about a 10% loss. Fair enough. Okay, price of gold struggling. Yes, Max certainly is. Pat, yeah, if it does drop, it would be a good time to buy, especially if interest rates go up and shares go down. Yeah, so Pat, let me know if you think, what is that relationship between gold and interest rates? Do you know if there's a bit of a correlation there? Be keen to do some research on that. Pat, you got some shares in US stock Lumen this week, bit of a gem that's been underrated and overlooked. Yeah, okay, I'll put that one down on the list. I'm not familiar with them. We'll just plug those guys in and see what they do. And then I better get to my presentation. I've let it go. Lumen Technologies, American telecoms company. Okay, So is it like a AT&T Verizon competitor, perhaps? Cool. I'll just put a pause on the comments there. I'll just jump into the presentation, get through that quickly. We've had a great chat so far, so I'll just go over those notes I prepared. Pull this up so you see that all good. Yeah, so first company I had on the thumbnail was Adbri, who's enjoyed a bit of a lift after a pretty sad decline since July 2018. So if we have a look at Adbri's share price, we can see that, where are we? I can do it here. Adbri. If we look at their stock details, we can see sort of since this 2018, July 2018, it's just been sliding. Yeah, not so good, but we can see it's starting to lift now. So let's have a look at the reasons why that might be, and so the way the company is shifting a little bit. So ABC's principal activity is the manufacture and distribution of cement and cementitious products. They make a lot of like concrete blocks for building and concrete additives and that sort of thing. So heavily involved in the construction industry. Some points from their recent result presentation, which was published the other day. Outlook for construction materials demand remains robust, but it's less certain in the second half of 21 due to timing of the large infrastructure projects coming online. They've got a strong production outlook for gold, nickel, iron ore and aluminium. Competition for them continues to be strong, and January trading was above expectations. So sort of nothing comments here, I guess. There's no real substance to them. We know infrastructure projects are coming online. That's a given. When we look at their financials, earnings per share and revenue went backwards. So not positive. Why is the share price going up? Debt declined, and more on this in the next slide. Gearing improved to 30.5%. I've done my own calculation on the next page. And from an article in Rask Media, Adbri delivered a 98% increase in profit, despite reporting a 4% fall in revenue. So this is a trend we're seeing of lower revenue but higher profits. Is increasingly common in 2021. So they mentioned competition was strong. It's likely the business is probably contracting a little bit and focusing on becoming more efficient. So and paying down debt as well. So interesting tactic, and I think the revenue declining might throw a lot of people off, but the net profit went up, and we saw that with Appen as well. The revenue went up, but the net profit slid only a touch, and investors jumped. So 98% increase in profit is incredible, especially through 2020. Great effort by Adbri, and it's no surprise that we're seeing their share price lift. That's awesome management. And we have a look at their balance sheet, and we do our own calculation on the debt to equity ratio. I think they talked about gearing improving to 30%. Well, I make it 2019 debt to equity 45%, and sorry, that's meant to be 2020. Debt to equity is 38, so significant drop in debt to equity. A low range would be 20%. Appen's at 0, which is great. The lower the better. So we know the business is becoming more efficient. So that's a little snapshot on Adbri if you've been watching it. I know it's been a favourite stock for many over the years because of the massive run that they've had. If we look at that price chart over 10 years, it's been a pretty good run. So will they come back to form? Who knows? It's not necessarily a growth stock, but I think their dividend's good. Let's have a look. Just check their dividend payout history. It has been good, but it's slumped since their performance has. So I'm not sure what the yield is. 4.22%. So not bad. 2.95. Yeah, and a reasonable payout ratio as well. Plenty of headroom there. So and a discount for the DRP. Not bad. So that's Adbri. Thought I'd do a little snapshot on them just to see why they've been rising up like they have. The next company to talk about is Afterpay. So what's been happening? We've actually seen a bit of a drop in their price, which is unusual. But very recently, only a couple of hours ago, reported we've seen a partnership announced with Stripe. Some of you might know Stripe, some of you might not. US company. The main reason I know Stripe is that they are a payment partner with Shopify. So Shopify is huge, as we know, massive e-commerce platform, easily accessible, and Stripe is super easy to integrate. Now Stripe is allowing users to integrate Afterpay without an application, onboarding, or underwriting. Now, I've tried to implement Afterpay on an online store before, and it was, I'm not going to say it was hard, but it was, they were very thorough. So they wanted all your contact details. They wanted to remind you that their fee is something like 4 or 5 or maybe even 6% of a sale, which is a lot. I actually ended up not implementing it because it was just a little bit too much, and I just thought it wasn't worth it. So Stripe, having it built in, be huge, and I'm sure users of Stripe will tick the checkbox to allow Afterpay because it's becoming a recognized brand. It definitely helps your conversions in online sales. I think this is going to be a huge boost in Afterpay's accessibility and the amount of merchants that they're onboarding. I think it's going to be big. So in addition to Shopify, the buy now, pay later giant and Stripe are also teaming up with website building platform Squarespace, so another massive one. You can build a store on Squarespace so easily to provide a fully integrated checkout experience. So Afterpay is busting into e-commerce and making their products so accessible. And I think I know we've seen a drop in their share price, but I think it'll mean big things. So on that drop, so they fell 8% yesterday. Why was that? No news. But what we talked about earlier in the episode about treasury yields, especially in the US, pushing 1.4% from a low of 0.5. People are getting concerned, especially about these high growth technology companies. Are they going to be able to withstand rising rates? We'll soon see. But since then, we've had this news about Stripe. I think we'll see Afterpay have a bit of a belter tomorrow. It's becoming a very appealing company. I'd love to know what you think. Might jump straight back over to the comments and hear what you've got to say about that. Who have we got? Where are we up to? Pat, be a good time to buy. Yep, I got some shares in Lumen. Yeah, we went over that. Asx Analytics, thanks for joining, mate. Good to see you on the stream. So regarding Appen, wondering if the recent broker downgrade by Macquarie is also weighing on market sentiment. Yeah, I didn't see that, but yeah, that's probably a good observation and a good pickup. Be interested to know what their justification of that downgrade was. That would be something worth looking into. If you know, drop another comment and let me know. Lindo, how are you, mate? Made the live stream. Mrs. isn't happy if I'm not watching maths with her. Did I miss the Afterpay analysis? No, I don't think so. I think you might have snuck in just in time. Married at first sight, I think you mean by maths. So sorry to you, Mrs. Lindo, but yeah, this one's worth watching. So you can catch them on replay. Obviously, give the video a like if you haven't already, and subscribe to the channel as always. Pat, increasing interest rates and increased chaos in the markets generally because people want to invest in gold and tangible value equities because they are safe, which can see the price rise. Yeah, that's an interesting point. So this was in response to the question I put out earlier, what happens to gold prices when interest rates go up? So it's a good point. So gold goes up because people are worried about essentially their money losing value. If interest rates go up, the CPI, which is the general rate at which prices increase, starts to build and people want to put their money in something physical. So that's a great observation. And tangible value equities. So you're talking brick and mortar stores, companies that have an asset base, which is maybe based in property, like a Goodman Group or someone along those lines. Very interesting. Will Adbri's nickel be mined in an environmentally friendly fashion? Good question. What sort of quantities are they mining resources at compared to competitors? I'm not sure if they were referring to nickel as an input into their operations. I don't believe Adbri actually mines anything. I could be completely wrong there. Let's have a look. I think they're talking about, when they talked about that in their investor presentation points, I think they're talking about commodities as a general sphere. Yeah, I can't. So their products, there you go. So industrial minerals, perhaps I'm wrong. Let's have a look, see what it says here. Supplier of industrial minerals. So Adbri is a key national supplier of minerals, including lime, stockfield minerals and fillers, high-grade silica. Yeah, so it's not nickel. Interesting. Yeah, look, I don't know in particular why they reference that. I think they're just talking commodity markets in general, because I would presume that if nickel and copper, etc., are booming, then demand for their products, which aren't really tracked as a commodity on any exchange, like you don't see the price for cement tracked, I don't think, or concrete, for example, they'd probably use that as a guide stick to see how the industry is going. You know, if there's massive demand for copper, it normally means that industry is really pumping, and there's probably going to be demand for concrete, for example. You know, if nickel price goes up, nickel miners get involved in building new mines, in building processing plants, and they need concrete, therefore concrete price goes up. That's my interpretation. Pretty sure Adbri doesn't do any mining. Let me know what you think. I might have got that completely wrong, but I think that's what they were getting at, mentioning that in their results. Devinder, thoughts on Zip and IOU? I might have to leave those for the next live stream, and I might make those two companies actually the topic of that live stream, and we'll get an update on those guys. Yeah, Zip I've mentioned before in a previous live stream. IOU I haven't covered. Maybe that's worth its own video. Let me know if you'd like to see that. So BC, great presentation on Afterpay. I'm super bullish. Look, after seeing that, is it time to jump on the train? I'm not sure. Perhaps it is, but yeah. ASX Analytics, thanks for getting back to me on this one. 17th of Feb release, Macquarie suggested that increasing competition would mean a potential downward pressure on Appen and a $19 price target. Yeah, okay. And where are they now? Just below that, I think. APX, yeah, 17. So they're below the price target. So they've been knocked even harder than what Macquarie was suggesting. Yeah, interesting. But it's funny they say increasing competition, but you know, their top customers were increasing orders, I think by 34%, they said. And they've also gained 136 new customers. So I wonder who their main competitor is. That would be something worth knowing. If you know, let me know. I'd be interested to see that as well. Haven't heard of anyone who does the same thing as Appen, but clearly there is. Lindo got the analysis on Afterpay. Great news for Stripe. Yeah, 100% is. Also great Appen video today by ASX Analytics. Yeah, okay, I'll give that a watch after. That's a good recommendation. He's been crunching out the videos, so go and check out ASX Analytics channel. If you haven't already, that's his profile there. Remember the face, he's doing great things. So yeah, if you haven't already, jump onto his channel and give his videos a watch. Produces some great content and always delivers good comments in these live streams as well. So cheers for that, mate. Pat, yeah, well they might have had a mining division that I didn't know about, but I don't think so. Yeah. On a semi-related note, sounds like Clean Tech Holdings might split their purification section into a different company from their rare earths. And is Clean Tech, I gather by the name, they might be a clean miner, which is something we're all looking out for. I know you keep mentioning it, Pat, but yeah, it's something so important someone like Vulcan, but for nickel and copper, would be a prime target for Elon Musk, I think. So look, guys, I might wrap this one up here. It's been a great stream, almost 50 minutes. Had a fantastic chat. Great to get your feedback on so many things and have a discussion. It's always good fun. I've got those couple of stocks for the next episode or next live stream, Zip and IOU. And I've got a video coming out probably tomorrow on a company called Seralto, which is ticker code CRO. Interesting, also payments-based company, but it's more business-to-business payments. So watch out for that one tomorrow. Appreciate your support when that comes out. But yeah, I think for now, probably call it quits. Thank you so much for joining me. If you are watching and you're not subscribed, please make sure you do that. And if you're watching and you haven't hit the like button, please do that as well. Hope you have a good night and enjoy the rest of your week. It's been great having you all on the live stream. Thanks, everyone. Thanks, Lindo. Thanks, Pat. And have a good night. I'll catch you in the next episode. Cheers.